Welcome to this video. We are talking about a guide to international trade or guide to international business and trade finance. In this session, we will talk about how companies settle the international trade transaction. Cross-border commercial activities are essential part of the global trade. And when you have business across the border, there are risks and there are difficulties in settling the parties. There are unique challenges, and there is a need to use the specialized mechanisms that are available. Here we will explore how companies settle their cross-border trade. Cross-border settlement refers to processing of or completing the financial leg of the transaction. When one party supplies, that is performs, the other party has to pay. It involves transfer of the funds or final settlement of funds across national boundaries, and they may at times require conversion of the currency from the home currency to the invoiced currency or the beneficiaries or the supplier's currency. The importance of cross-border settlement is because unless it is efficient, global trade will not happen. These settlements facilitate global commerce, they manage financial risk, they ensure timely payment, and they comply with international regulations. Only then the cross-border payment will help the global trade. Who are the key participants? The exporters and importers, of course. One has to pay and other has to receive. Commercial banks, the one who carry the money from one end to another. Central banks who facilitate the regulation in cross-border funds movement. Correspondent banks who help in converting or receiving or paying the currency in the nostro currency. Then there are at times payment service providers or clearing houses also playing a part in ensuring the cross-border settlements happen. There are various methods in which the cross-border trade is settled. Companies use various mechanisms for their own advantage or due to their own internal considerations. The most important of them is the international wire transfer. Most important of them is the international wire transfer. If a company in US is purchasing machinery from a company in Germany, then they will use wire transfer to send the money so that the German supplier will get the money from United States quickly the moment the goods are shipped out. The money comes into their bank account. The fees are higher if the transactions are small. Then the intermediary banks may have their own time and fees requirements. And then there is also potential or a possibility of a exchange rate fluctuation in case it is not happening the same day or the same time. What can be done? The parties can negotiate the fee structure. Who will pay? Share or ours or yours or whatever it is. And then we can use the Swift GPI to track the transaction and also understand who is taking more time or more fee to process this transaction. Another method of payment is a letter of credit. Letter of credit is a secure payment method. It is particularly good for a large and complex transaction. For example, there is a Chinese exporter sending goods to the Brazilian importer. Then LC is a better way of doing this transaction. Why? Because it guarantees payment upon presentation of certain specified documents upon meeting certain given conditions. The risk is the complexity of the documents that are required, the potential for discrepancy, and higher cost. The mitigate is nothing but careful review of the party, their antecedents, and the documents that are required and the documents that are now produced. We can also use EUCP or electronic LCs to make the settlements faster. Open account is another method of settlement. This is very popular because the charges are less. If both the parties are having a long-standing relationship, for example, a Canadian retailer and a UK supplier, they have a relationship. If they are in reliable with respect to country risk or bank risk or currency risk, then it can so agreed that the payment will be made 60 days after shipment. In this case, the risk is for the exporter. There is a potential for a delay or default in the payment, and there is an impact on the working capital of the exporter. The mitigant is to ensure you have a standby LC or a credit insurance or a political risk insurance. Sometimes the risk mitigation could be a supply chain finance program. In any case, a credit risk opinion report on the counterparty, the buyer, is always recommended. Documentary collection is another type of payment. Here, for example, if there is an exporter in Mexico and if there is an importer in South Africa, then the documents can be released against payment, or documents will be released against acceptance of a draft or a bill of exchange to pay on a future date. There is a limited protection, but in case compared to open account, this has a better protection. There are potential for delays in payment, and sometimes there is no guarantee that payment will come. But still, compared to letter of credit, this is less costly, and compared to open account, this is more safe. Then comes the automated clearinghouse (ACH) payments. This is becoming smaller for small payments or recurring payments. If there is a company in US and they have to pay to the counterparties in Canada, then ACH should be a better way to do, because it doesn't take more time to process, it doesn't cost too much to process. Verification of the party details is the only worry that you need to have while doing an ACH type of settlement. Now the market is emerging. Market is emerging and the settlement trends are changing. For example, there is a blockchain which is widely used in many parts of the world. What is special about it? The technology offers potential for a faster, transparent cross-border settlement. Ripple, the RippleNet had facilitated real-time gross settlement between banks in different countries. The challenge is the regulatory requirements are not clear in many jurisdictions. Integration with the systems is very difficult and costly. Scalability is not yet proved. The mitigant is nothing but to ensure that we have a continuous dialogue with the stakeholders to ensure it is more efficient. Then comes the CBDC, the central bank digital currency. Many countries have come up with a central bank digital currency to ensure the real-time settlement is happening faster. The most popular example is a digital yuan, which the China's central bank says can be used for cross-border settlement. The problem is interoperability, because not all countries have the same CBDC. And then comes the issues of data protection and acceptability in the cross-border trade. So we need a proper design to ensure that it aligns with not only the national monetary policies but also the global trade requirements. Then comes the stable coins. What is stable coin? It's a type of cryptocurrency, but its value is pegged to stable assets, like for example, fiat currencies or the government currencies. So the advantage is the reference value is relatable. For example, one USD coin could be used to settle a cross-border transaction, and instead of using the USD currency itself, if you are using a stable coin, the chances are you can use via blockchain as a crypto, and then it will be more transparent, more faster, more quicker. Again, the challenge is the regulatory scrutiny and limited acceptance. The mitigation is to ensure that it is transparent enough in the agreement and the payment mechanism. What we will have to see next is about the risk management in settlements. Managing risk in settlement is very crucial. Most important risk is the FX risk. Foreign exchange risk happens because the rate at which one currency is exchanged for the other, the value of one currency in terms of another, is always changing. It is volatile. A Japanese exporter agreeing to sell goods to US dollar in US faces the risk of yen strengthening. If if the yen strengthens, the Japanese exporter will suffer. If the yen weakens, the Japanese exporter will benefit. This is the impact of the FX rate or a fluctuation. How can it be managed? Maybe we can have forward contracts or options to hedge. Maybe you can have a multi-currency balance sheet. Maybe you can have a natural hedging if you have a buy and sell in the multiple currencies. Next important risk is the counterparty risk. The counterparty risk refers to the situation that the party may have liquidity concern, insolvency, or a bankruptcy risk, etc. Or the country may have a currency shortfall. So, conducting thorough due diligence before entering into a contract is the only mitigant for that. Country risk. Country risk is political instability, economic downturn, inflation, changes in regulation, non-availability of a payment capability of the banking system. All these are the country risk. To a certain extent, the export credit agencies or the insurance could help. The best method to solve this is to have a diversification across multiple markets and regular monitoring of the risk indicators so that the transaction can be structured in a fashion that the trade finance risk is taken away from the currency angle. What are the regulatory and compliance requirements? The most important of that is the AML, anti-money laundering, or the KYC requirement. You have to the bank should know the customer should know the counterparty, they should know their line of business, they should know their counterparty with whom they are dealing with, so that in spite of influence of varying jurisdictions and the multiple regulatory requirement and the cost of compliance, the transaction will remain compliant due to the due diligence that we conduct on day one. So staying informed of the changes, being updated of the best practices is what will help to ensure AML KYC angle is up to date. Next is the compliance with economic sanctions that one country imposes on another country or an entity or an individual. Sanction SDNs, specifically designated nations. So there is a risk of inadvertent breach of a potential sanctions due to indirect relationship. The counterparty may deal with the party, the bank with whom you are dealing with may have a customer who is in breach of sanctions like that. So a comprehensive sanctions screening process at every step, every stage for every party, every vessel, every place, every entity is very much essential. Then comes the risk of foreign exchange control. Suddenly, one country may say no more foreign currency can be sent out due to certain local currency problems. So, this is another risk where ECAs could be of help. Sometimes you may have to use the local currency to collect the funds. Sometimes you may have to have structured trade finance solutions. Then comes the technology or innovation in trade finance. What is technology or innovation in trade finance? The API integration. By way of API integration, what we can achieve? We can be having a easy transaction by integrating the bank's systems with that of the corporate. There are some challenges in legacy old systems in connecting to each other due to legacy or historical reasons, but application programming interfaces enable seamless integration between different systems today. They improve the efficiency, the automation brings in real-time visibility and also enhances the accuracy of the data. Cyber security measures needs to be taken care, it goes without saying, but this integration will help in automated checks in a quick and efficient fashion. It also provides predictive analytics because of the digital data available. Internet of Things can be helpful also in the latest use of technology. Coming to the future trends or what is the developments that are happening, there are certain challenges, not only the development, but challenges also. The challenges are multiple intermediaries are involved, so they will charge fees and they will consume some time. FX conversion is a challenge. Compliance is not easy. So negotiating the fee structure and optimizing the payment is a very big challenge for any corporate. Why? Because there is a difficulty in identifying where there could be error or delay or denial or defect. And if it is not automated, there will be little visibility. So these challenges can be taken care maybe by using Swift GPI or by having host to host, etc. Or maybe blockchain technology could also help. AI and ML could help in predictive analytics. And by all this, we can have a better speed or better efficiency in the way we do things. As far as the future trends are concerned, real-time payment is a focus. Greater interoperability and APIs is another focus. Looking for sustainability in trade finance and integration of the financial supply chain with the physical supply chain is another focus area. So, settling cross-border trade presents challenges, presents opportunities. There are traditional methods, there are modern methods. What a corporate or a bank will have to do is to understand the risks and benefits of the various methods and implement robust risk management strategies, because you are handling a counterparty liquidity risk or an FX conversion risk or a country risk for remittance. You are also having problems with ensuring compliance with international sanctions. How we can handle this is by leveraging the technology and staying informed about the trends. Thanks for watching this video. We shall meet again on another session.